Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site, we have Dr. Merav Ozair, global leading emerging technologies expert, as well as Phil Kwok, co-founder and CEO of EasyA, and we have Kwok, co-founder of EasyA. We're here to discuss the real-world applications of stablecoins, digital asset market structure, and the evolving regulatory environment. It is great to have all of you with us. I think the first time we've had brothers on the show, so this is exciting. Stablecoins clearly fill a lot of momentum with the passage of the Genius Act. We're seeing, the talent come back to the U.S. We're seeing offices reestablished, established. Banking systems are adopting it. But there's a lot of stablecoins out there now. So a couple questions. Is it a proliferation? Is it going to start to cannibalize itself? And which ones do you think are, have the viable use cases?
Well, first of all, thanks very much for having us on, Jill. You're absolutely right. Over the past couple of years, we've seen stable coins absolutely rise. We've had USDT, so Tether, we've had USDC. But I think that there's a couple of really, really interesting ones. For example, RLUSD by Ripple, which is bringing a very institutional first approach. So this is a stable coin which has its own niche. And I think what we're going to start to see is all these different stablecoins find their own niches. So we're going to have stablecoins which are very institutional, focused on, for example, like RLUSD on being adopted by those institutions. We're going to have ones which are more focused maybe on consumers. And we're going to have ones which maybe are even not quite stablecoins in the sense of the Genius Act, but synthetic dollars. So ones that can return a yield to users potentially, ones that are slightly separate and maybe exist within that carve-out of the Genius Act. So I think there's going to be a lot. Not all of them are going to succeed necessarily. But I think this space, honestly, is just so fast growing that we're going to see a lot more room for stablecoin growth.
Yeah, and Dom, let's even just take a step back for a minute here and discuss even what a stablecoin is, how they're being used, why even use them?
Yeah, I mean, stablecoins have a variety of different use cases. I think the biggest use case at the moment is really enabling people to transfer money seamlessly from one person to the other without the need for a bank or without the need for an intermediary. I think a lot of people, for example, if they're not in the US, they have big issues, transferring money from people who are in their local country or local village to other people, either internationally. You have a lot of migrant workers as well in the US, for example, who want to send money back home. But there are huge fees if you want to use, some of the more established players that actually help you transfer your fiat. And so with stablecoins, they can just transfer money seamlessly between borders. And that's obviously something that we're working on internally, but also a lot of big crypto companies are working on solving.
Yeah, and then we're also seeing the banks, they're certainly moving
Yeah,
in.
I mean, we see, JP Morgan and Citigroup and also Bank of America, that they think about, doing like a joint one. We'll see how that's going to work. The EU already have a joint one. They have like 10 banks, from different, countries in Europe. Italy, there's, Cassia Bank and IGN and, et cetera, like 10 of them. And that's, of course, going to be compliant with MiCA. And it's going to be pegged to the EU because they're trying, to keep their, kind of like to have like a challenger to the US dollar. I mean, because there's a lot, of them that are mostly, the US dollar, and they don't want to lose the euro, strength, if everyone's going to use the stablecoins that are pegged to the US dollar. So we have the banks who are doing that in the EU. We have the banks who are trying to do that here in the US. But I think, from the bank perspective, I mean, also in the EU and also in the US, what I've seen is that, they're, at least this is what they're saying, that, they are targeting the institutional clients and not so much, the business, commercial, et cetera. I mean, you can see like Visa and MasterCard are, Visa, in fact, mostly now they're having like a trial with, they're offering stable coins to the, what they call like the gig workers and creators. And that they will have like a fast payment from businesses and platforms, et cetera. So they are, I think, very, very focused on that. So that's kind of another use case instead of, the institutional clients. And I think that they did a survey, and it seems like 60% of those creators, what drives them to use, stable coins and et cetera, digital wallets, is the fast access to funds.
Right, and that's why I want to go back to EasyA for a moment here, Phil. We tend to think very U.S. Western centric as it relates to digital assets and so forth. How do we trade? How do we hedge? What's the value of them? What's the use case? But the fact of the matter is, there's a few billion people that have been using the underlying infrastructure that don't have access to banking to create local microeconomies, alternative forms of capital and financing. And we take that for granted. So, we're thinking now, how do we get exposure to that addressable market and allow them access to the U.S. markets?
That's a great question, and that's something we're working on at EasyA Labs. So we're working on bringing together these technologies. What we have right now, I think there's never been a better time for blockchain, because we all know that we've got the foundations there. We have amazing blockchains, like for example, the XRP ledger, which allow you to transfer any amount, literally across the whole world, for just fractions of a penny. Right? You have stablecoins like RLUSD, which then allow you to take $1 million, $100 million, $1 billion, or even just $1, and just send it across for literally, again, fractions of a cent. And what we are working on is allowing people then to access the opportunities and the financial opportunities that anybody in the world would access. You can think about anybody anywhere in the world can't access yield based on their own currency. They can't access a US dollar-based yield. They can't borrow against their collateral. That's all what we're working on right now, and I think that's why this is so exciting. We're looking at this phase of bringing, you mentioned banks, right? I think banks are this great example of banks are the first way that we have into the financial system. And to be honest, they're really the only way that most people get into the space in the first place. There's no ability to directly access, and we have amazing players like Robinhood who are giving more of that direct access. But I think that what we're starting to see, and this is a big theme that I think is going to grow into 2026, is that we're going to start to see way more of the world actually access finance directly through the blockchain for the first time ever.
Which is so interesting, because it really was consumer driven, right? And now you're seeing the banks, clearly their priorities are faster settlement and being able to have more control of that flow. But I think it's fascinating that it really was a consumer driven application and use case.
100%, yeah. I mean, I was just saying before, I used to work in finance. I used to work in TradFi, Blackstone, Goldman. And I think, one of the things that I always hear when I catch up with my old colleagues, and was catching up with a couple this week as well, is that they're really taking note about stablecoins. They're really interested in, what the actual practical use cases of the blockchain are. Obviously, ETFs are going live. New regulatory clarity is there as well. And so it's just a matter of time since all of these big institutions that traditionally have shied away are actually starting to come in and create their own stablecoins, like you were saying, create their own applications on the blockchain as well, and start to use the technology that we are building and that people on the ground are actually building.
But I think that still, the driver will be the consumer. I mean, as much, as we say, okay, institutional, and they're going to come in, they were, waiting for clarity from the regulators. It's coming, we're probably going to have.
Already tested.
Yeah.
It has to. Market structure is everything.
It's coming. I know. I mean, it has to come, right? So it's coming. I mean, we already have MiCA in the EU, which is, they're still, struggling to implement it, but that's a different story. And but I think that it's still going to be very much consumer driven. I mean, I have some experience, talking to people like in the Philippines and other places where it's more like a necessity for them, rather than in the West, here in the U.S. or EU, say, why do we need that? But they do feel why they, and they have been using it even before we kind of got into the.
Which is why they were able to leapfrog our technology, because they didn't have existing central bank infrastructure.
Exactly. So they are definitely going to drive it even more. And I think probably now with the clarity with all kinds of institutions, we're probably going to see a little more of that, use cases that are targeting the consumer rather than just institutions.
Yeah.
So because that's
I think it's a bit of both. I think
it's going to be both.
Yeah, it's a bit of both, because I think now that we have the consumers, what a lot of these players like BlackRock, for example, are looking at is they're seeing that actually the blockchain is a way to access these consumers. Right? It's a new distribution channel to sell their products into. And so it's kind of like a little bit of give and take, right? It's like consumers are going to use it, institutions are going to come in too, but they're going to come in because they can access this whole new suite of consumers.
And then what we have, like the TradeFi is going to move to the DeFi, and what we have seen, with this relationship between the institutions and the consumer, we're going to see that now with the DeFi. But then, we have to think about, okay, which blockchain are they going to use? So there's a lot of discussions about that. that the institutions probably are going to use Ethereum, everything else, that AI-driven and consumer-facing will probably do with Solana. Even though I listened to an interview from the founder of Solana, and he believes that they're even going to take over Ethereum. But that's,
But I feel like we need to start at A before we get to D, right?
Definitely.
The Clarity Act has to pass. We need to understand what the market structure looks like. That's really where the line in the sand is going to be drawn. We saw what happened with the Genius Act. If you want scale, it needs to happen here in the U.S. Right. And I don't want to sound flippant about it, but that's really where you're going to see the scale derived from.
100%.
Yeah.
I mean, if you look at sort of all the big tech innovations, they really have started in the US. They started in Silicon Valley. You look at Nvidia, you look at Google, all of the biggest companies. That's really where they started, and ultimately, then the rest of the world came on board. And I think you're seeing that with a lot of the top blockchains, right? They're US based. They actually started here, blockchains like Phil was mentioning, XRP Ledger, even blockchains like Solana, they all are US blockchains.
Yeah, exactly.
And then ultimately, that's where the world will, catch on from.
Yeah, and Phil, but I think also a key to this as well, once we get that clarity, is, okay, which blockchains, just like with stablecoins, are going to serve the industry best. Financial services are heavily regulated. These have to be integrated. And I think that will, certainly be the competitive deciding factor. Security, governance, privacy is going to be paramount for financial services.
Exactly, and I think that's why when we're looking at blockchains, and I think there's a lot of talk, okay, which blockchain is going to be one? You have to look at which blockchain is built for business, right? And which one is going to be the one that has that scale. And also which one, exactly as you said, privacy. Banks don't want to send transactions to each other or between different places, and just everybody to be able to see exactly what's going on, right? That just can't work. And so I think there's that pragmatism, right? Whereas in the past, some blockchains have taken like a very cypherpunk approach and just being like, look, everything is free and available and you can see exactly what's going on. There's a lot of transparency. But I think we're starting to see really cool blockchains. For example, we were just catching up with one of the senior engineers over at Ripple, and he's working on privacy, bringing that to the ledger and being able so that you can actually have a blockchain that businesses can use with peace of mind.
Yeah, but I mean, the whole idea of privacy can be applied even I think better on the blockchain, because we have the zero knowledge proof, they can do
100%.
that.
Yeah.
So there are ways to do that. I mean, it can be transparent, but not fully transparent. We've seen that even many years before, even before the institutions, got in. So we do know that it's possible. It's just a matter of finding, the right solution that will work for banks and businesses that makes sense. But it is possible. We are the solutions.
And then I think when you combine these two together, when you combine the stable coins together with blockchains, an RLUSD together with an XRP, I think that's where you get a supercharged amount of utility. And I think utility is the thing that everybody's talking about. How do we bring more of that? And that's when the institutions come in. That's when consumers can use it. And then this whole space is just going to grow, I think, bigger than any of us have ever imagined.
Yeah, and the network effect, as everyone is talking
Precisely.
about. So
Well, I mean, think about the capital markets as they evolve. And, I came from TradFi as well before getting into media. And just to see how it's evolved over the past 25 years, I think we are at that point now where, whether it's tokenization or how it continues to digitize, that's where liquidity is going to be sourced
100%.
at the end of the day. So to your point, activity begets activity.
Exactly. It was funny, actually. We were speaking at the stock exchange a couple months back, and in the pit, many years ago, there were actual physical people, trading, actually, interacting with each other. And that was, a handful of people on the trading floor, and it's literally just, all automated. And there's, market makers, etc. It's all digitized. And same thing will happen with blockchains. I think banks can become much smaller by relying on blockchains. You can get, huge network effects through the different blockchains, like you were saying, and ultimately it's going to have huge efficiencies for the institutions. And ultimately a lot of that value is going to accrue to the underlying blockchains.
Right, exactly.
And that's a great point, because we know that efficiency is driven by the blockchain. Now, how are we extracting the value?
I think the efficiency also going to come because, we still have like over-the-counter for very complex, derivatives. And I think even those complex derivatives are going to move on chain because it will be easier to facilitate them. And the privacy, the security, the transparency. And even creating the most, complex, products that you can imagine, from different securities, and blockchain, the tokenization is gonna flourish. So from that perspective, even those who are kind of like over the counter, which like opaque. Moving on chain, I think that will be like more efficient because it's going to be more transparent. Less opaque. So we're going to
100%.
have that.
Yeah. And people don't like, oftentimes people are dissatisfied with their banks.
Yeah.
Most people don't have a pleasant experience when they interact with their, the banks and the people who actually keep their money. People obviously also dissatisfied with fractional reserve banking, those sorts of things. And stable coins, they're obviously backed one-to-one, which means that, when you give $1 or when you get $1, it's actually backed by a physical dollar on the other end, unlike when you have your money with a bank.
Yeah.
So
Plus, you're also not getting 0.01%
exactly.
on your money, and you're actually earning
you can get
some
much
kind of
higher
yield.
yields. Exactly. Yeah.
But the thing is going to be, the Genius Act, doesn't allow you to have interest on the stable coins. However, there are going to be all kinds of solutions. I don't know, some exchanges like Coinbase, they're going to offer, okay, if you're going to park, the stable coins here, you're going to get, some kind of.
They already do.
Exactly,
they also,
they also 3.5%.
Yeah, exactly. So, But we're going to see more of that because people are saying, okay, why should I, hold it? It's like, when you have like cash in your bank, you still don't want to, just hold it as cash. You want like a CD or something like that.
We saw it happen with fintechs, right?
Yeah.
Everybody migrated over, overdraft fees, more access to
Exactly.
ATMs, being able to get your money earlier than your payday. So I think once this becomes a utility, UX has certainly improves and it becomes ubiquitous. We don't think about direct deposit, and that was a huge thing, right? Right?
Yeah.
So I think.
It's even, you look at sort of, when you go to a store, right? You buy something. Years ago, you used to be buying with cash. Now you buy with Apple Pay, and you don't even see the physical cash. It's very hard to actually pay with cash in many stores. And eventually, it's going to be running on crypto rails and blockchain.
Yeah,
so that's a very good parallel, actually, that we often think about.
Yeah, definitely. But we also need that all of these, solutions to be agnostic to whatever, blockchain you're using, because otherwise, for example, with Apple Pay, you can only use it, on iOS. You can't use it on Android. So we have like two solutions, if you're using Android and doing this. But we do have it right now. Like, if you have like the USDC, then you have it on Solana, you have it on Ethereum. But at some point, it has to be all like,
But that's really the use case for it, because interoperability has certainly improved. Security has certainly improved within the ecosystem, because when we were talking about this 2, 3, 4, 5 years ago, if interoperability did not improve, these use cases would have failed. And I think we're at that point now where the market structures are a very real conversation.
Yeah, 100%. I think so, exactly. And I would say that I think that certain blockchains will find their own niches.
Right.
I think that that's for sure. I think that just like we saw with the internet, there's this technology, but people are building things that are specific to particular niches. And I think that some are going to be very, very niche. Some might just be for gaming, right?
Right.
Yeah.
There will be the big ones that are really built for business, and potentially even one, right? As we said, liquidity begets liquidity.
Yeah.
And typically what we do see is there is a winner takes all in particular markets, and there will be those one or two behemoths that do rise. And obviously we're at Nasdaq, there's Nasdaq, there's NYSE, right? And I think that those sorts of things will have our niches, but we'll also have ones that do have winners.
If you think about niches, there's like the hyper liquid. They're very targeted to like the equivalent to algorithmic trading and the high frequency. I think this is and they are really like getting momentum. Because they are very targeted. They found the niche. This is what they're doing.
Yeah. It's almost like trading routes.
Yeah, exactly.
All right, guys, we got to wrap. Appreciate everyone's
Thank you,
insight.
Jill.
Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.